It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property right across your weekend. Yes, we do that 7 days and available just after 6 a.m. every morning. As heard on iHeartRadio and Spotify. It is a Sunday, June the 23rd today. And if you're going to the supermarket today, or if you went yesterday, ouch, of course, only a handful of things. It soon racks up to $100 these days. And you might remember back in January, the federal government tasked with this 12-month investigation into supermarket prices. This is aiming to address allegations of price gouging. And the government committed $1.1 million for Choice, a consumer group, to compare supermarket prices. This is interesting because the first Choice report reveals that a basket of groceries at Aldi was about 25% cheaper than at Coles and Woolworths, whose prices were nearly identical. 25% cheaper. We know where to go, don't we, if we want to save 25%. Despite scepticism from supermarkets about the findings, the report underscores the importance of ongoing scrutiny and the price transparency. No doubt about it, a little bit of competition, more injected competition will go a long way. Well, coming up this morning, we are reflecting back over another busy week. We kicked it off on Monday talking to Michelle about a well-being report to check on suburbs that have higher wellness than others. Tom Elfrey, he got out of Coogee because he couldn't afford to buy there. He then found a cheaper location to buy an apartment. And we caught up with him on Tuesday, found out his story. We caught up also in the last week with Sarah Thompson in Geelong about different government housing schemes and the misconceptions about guarantors plus lenders' mortgage insurance. And of course, we were in Perth talking to Matthew Hughes about some legislative changes in WA and what that means for landlords and tenants. So that is all coming up on our Sunday. Have a fantastic day.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
Yeah, I think, since releasing the Cities and Regions Wellbeing Index earlier this year, there's been a lot of commentary around what it might cost to live in areas with higher wellbeing. And, Noosa, Douglas, Brisbane, those areas of Queensland are certainly areas that performed better on overall wellbeing. That means that they performed well in a combination of factors. So it wasn't just, the way that they performed on, let's say, wellbeing and equality, but they might have good access to health services, and so they performed better on that front as well. So it's really the combination of factors that affects holistic wellbeing.
Yeah, and subtropical climate, this is quite interesting because, as I said, it significantly contributes to the health and wellness. And we talk quite a bit about Hervey Bay. That has won, I think it is a couple of times now in a survey for the most happiest place in Australia.
Yeah, that's a really, interesting point. And areas in Queensland that have a higher proportion of land and natural reserve, they performed really well on the environmental dimension of the index. In our daily lives, we can certainly recognise that where we have access to these open spaces and sparkling blue waters, these contribute to our overall well-being. What we didn't consider in our research was things like life satisfaction and social cohesion. If you speak to residents of these areas, they will often share stories about the sense of community and belonging that they, connect with on a daily basis in their communities. And I think, we can't forget that that's a really important influence on overall well-being as well.
Yeah, just in terms of, let's say somebody is in a one-bedroom small apartment in Sydney paying a very high rent for that little space. It's very small, they're contained in the apartment block, as opposed to somebody that is living subtropically, got quite a bit of land around them to enjoy. These are two different sort of edges of the sword.
Yeah, that's correct. What we found in our research was that in many, big cities around Australia, that rental affordability was quite poor compared to regional areas. And so that can certainly have an impact on people's well-being. But what we also know is that people make financial trade-offs to live in centrally located areas so that they have access to education and health services. And so what we saw was that in many cities, overall well-being still was reasonably high, but when you look at the housing dimension specifically, it didn't perform as well as other regional areas where rental affordability and choice of housing might be a bit more affordable.
The economy, it's such a big driver, isn't it? Not all economies from different states are running at the same speed. You look at Perth. Perth's local economy there is fantastic. How much of a factor did that play in your reporting?
It certainly played a big factor in terms of the urban regional divide, where we saw that in urban areas, the performance on the economy dimension was better because there's larger, more diverse economies. In some regional areas, such as in Western Australia or Queensland, for example, they have industry strengths in mining, and so that's contributing to their higher economic performance. In those same locations, they sometimes did not perform very well on the wellbeing and community dimension, and specifically on the gender pay gap indicator, because where you've got, a high concentration of the mining industry, this is not an industry that has traditionally had a lot of female representation, and it's also a higher paying industry. And so we're seeing that there's quite a large gender pay gap in some of these regional areas in Queensland and Western Australia.
From first-time home buyers to seasoned investors to breaking property news. Discover the stories behind the real estate.
You were saying that this was 4 years ago, so if it was really difficult for you to sort of buy into Coogee, impossible now, right?
Yeah, absolutely. 4 years ago, we were sort of looking 1.1 million for a 2-bed. And that was, at the time, top of our budget, and they were going sort of minimum there. It soon ramped up. We went down to Maroubra. There wasn't a lot in Maroubra, sort of more in the junction itself. And then we came across Little Bay, and we've actually found a 1-bed sort of around the 800,000 mark 4 years ago. We love it. Not looked back since.
I was quite interested because this area, historically, it was chosen for an infectious diseases hospital due to its isolation, probably not so isolated now.
Yeah, that's right. Yeah, there's some great history here. And as you can imagine, Sydney back in the sort of 1900s, no one came out past Coogee maybe, but it was all pretty sparse. And that's why it was down here on its own. So it was an infectious disease hospital, as you say, then grew into a much bigger hospital. Eventually, it got closed. A lot of it moved to Randwick, eventually got redeveloped into these sort of apartments and the complex it is now.
So you're the local tourism officer, are you, for Little Bay?
Yeah, it feels like that. My friends jokingly call me the mayor because I know lots of different people. And I'm not the mayor at all, but I love that aspect of Little Bay, that everyone kind of has a connection to each other and are very friendly.
Well, you probably are going to be called the mayor now that you're on the podcast, of course. You'll be able to say, well, here's another little bit of a plug that I've given Little Bay.
Yeah, absolutely. Yeah, I told my local cafe just about sort of coming on, and he was like, oh, that's great news, because, we are far away, and other than local trade, they all need that business to survive, and they've done it through COVID. So we've got to keep, praising them for sticking with it.
Yeah. So who do you want to give a shout out to? Here's your opportunity, Tom. Go for it.
Oh, wow. Well, probably everyone here, but the Green Olive Cafe, Piccolo Bayer, which is next door, great spots for breakfast and lunch, Site Pizza across the road. And then that's the sort of main restaurants and cafes now. There's a gym, pharmacy, and, the IGA kind of food works set up, and they're all great as well. So they all do a great job.
Yeah, it's a great question, Craig. I mean, you could go on Google, you could go and try and find information on there, but there are just so many. So we always say to people, reach out to your broker, have a chat with them about what possibly they could get access to. First home buyers, there's a first home guarantee that the government have. And there's quite a few different sort of types that are out there. So there's a first homeowner scheme, which is to buy a property established or do construction. There's a regional scheme. There's one for single parents. So they only need 2%. So 2% of the property value. So if the property value was $500, they're only needing basically $10,000 plus costs to get into that property. They've changed it recently, actually. It had to be a partner or a solo person, and the government's actually changed that recently. So if you want to buy with a friend or a mate or a sibling, the ability to do that now has increased. So that's also great. All states have different types of fees in relation to stamp duty and transfer fees. So it's generally state by state that those are decided. So it's a really good idea to get in contact with your broker, so they'll be able to guide you through what you're actually capable of getting.
Lenders mortgage insurance. This is a big handbrake for a lot of people, Sarah, scraping up on their deposits. Let people know why they need it, and I guess, is it worth it?
Yeah, great question. So with lender's mortgage insurance, it's actually a bank insurance, and it covers the bank if the borrowers default on their mortgage and they cannot recoup the property or the price that is outstanding on the mortgage. If they can't recoup that back, then the lender's mortgage insurance will actually cover that to the bank. So really, it's a bank insurance for themselves. It doesn't cover a client for their own home loan. There's good and bad, obviously, with LMI, we call it. It's a necessary fee sometimes if you're borrowing over 80%. And sometimes it can be better paying lender's mortgage insurance now to get the property, sooner than having to save another $30,000. But by the time you do that, the property might have gone up by 100. If the mortgage insurance costs you $5,000, but you can get it now and not have to wait to save for further amount, and obviously the delay in time, I think it can sometimes be a really good option.
Yeah. And look, we should talk about why people go back and forth with the question about engaging a mortgage broker in the first place. And as I mentioned at the top when you were talking about the government schemes, I mean, there's a very good reason why. So when do you think is the best time to see a broker, and how important is it for people financing up their loan to do that through a broker?
Seeing a broker at the start of your journey can definitely help, because they're going to put you in the right stage from the very start of where you need to be in the education piece as well. Also, having access to over 60 different lenders, which we have at Loan Market, means that we can go to so many different banks to be able to assist a client and find the best deal for them. With lenders as well, as we were talking before about the government schemes, if you walk into particular branches, they actually may not even be part of that scheme or on the panel for that. So we can save people a lot of time and a lot of money. And yeah, I mean, you reach out to a broker at any time, refinancing, upgrading, downsizing, any of those.
Know your property with us on the Real Estate Podcast.
Yeah, so they've recently come into effect, and the changes include several key adjustments that are just aimed at enhancing tenant rights and simplifying processes. So the key proposals revolve around limiting rental increases to just once per year, which is important in a rental market like we're in here, just to make sure that it's as fair as possible for tenants and they can maintain some sustainability and affordability in the place that they're in. And also allowing tenants to have pets unless the landlord can provide a valid reason for refusal. And then the other one, the other main one, was allowing tenants to make minor modifications to their rental property. So the reforms are intended to streamline some of the processes for returning security bonds and the like, also to prohibit rent bidding in this market, and just to make sure that rentals are advertised at a fixed price and that there's as much fairness as there can be in a hot market.
Yeah, so as I said, you see, legislative changes, they're pretty important. And if you are a landlord, your interest has probably just been piqued with what Matthew is saying, especially if you are a landlord in WA. So how are these proposed rental law changes going to affect landlords in terms of rental increases and things like pets, etc.?
Yeah, look, under the new laws, as I mentioned a moment ago, then you'll only be able to increase rent once per year. So typically when we would put together a lease, especially in a market like this, we would put in a provision for our landlord, who are our client, to be able to do a 6-month rent review. So that's out the window now. Whilst it's good for landlords to be able to capitalise on a good market, I think it's also good for tenants to know that they've got some sort of stability there in terms of their costs for at least the 12-month typical lease that they're signing. And then regarding pets, landlords won't be able to deny tenants the right to keep pets without a valid reason, and that could be linked to things like property suitability or strata bylaws. But essentially, or historically, what we've seen is that a lot of landlords have a negative attitude towards pets, big dogs especially, and this will just open the door to tenants who do have those sorts of pets, which there are a lot of, to be able to get into a property and not have their application decline for that reason. And if landlords do want to appeal, say no to a pet, they'll have to appeal to the Commissioner for Consumer Protection and provide justification. So it does sort of open the door to a lot of people who do have pets and want to keep them and have struggled to get rentals in the past.
From interest rates rising, a shifting landscape, rentals running hot, clearance rates, a tight rental market, we cover it all every morning from 6 a.m. on the Real Estate Breakfast.
Perth, Adelaide and Brisbane have grown, each of them, around 60% since before COVID. Canberra, Hobart, Sydney, Darwin is in and around 30% growth in housing values since February 2020, and Melbourne's 11%.
Many people sort of ask the question, well, why is this happening? Not everybody is kind of in the lane of understanding it, are they?
Yeah, look, it often is, you see the headlines or there's commentary around, look, there's just not enough houses, or it's a supply and demand issue, and building completions have also been lower. So we're actually getting less supply. Internal migration, we've seen a lot of net interstate migration going to areas such as Perth, Adelaide and Brisbane, which are more affordable.
We connect you to the best real estate information across Australia. The Real Estate Podcast.